So this is a cash flow question that came from the old ACCN2 paper. So this is a topic, cash budgets, that used to be in the AS specification. It's since been moved to the second year of the A-level, so it wasn't included in the old 7126 papers, but it will appear from time to time in the 7127-2 papers, so the management accounting papers. So this one was worth 19 marks. These days, potentially could be a 14 marker, perhaps with a 6-mark written question on the back of it. So let's just have a look at the computations we need to do. So it tells us that Marwen is a sole trader providing design services for individuals. He's would like to expand his business, and he's considering going into partnership with Nuran. She's asked him to provide her with a forecast figure of the business bank balance at the 31st of July 2018, and he's given us the following information. Now, often with receipts, when we're trying to work out receipts for a cash budget, we'll be given several months' worth because some customers pay in the month that the amount is invoiced. In this case, we are going to be doing a cash budget for the month of July. And one note about cash budgets is it means cash and bank all in together. So it's often quite confusing. It's called a cash budget, but essentially what we're trying to find is a closing bank balance. So just to clear that one up, it's all thrown in together. So as I was saying, some customers will pay in the month of July. Some will pay in July for money that they owed or that was invoiced in June. So in other words, 1 month in arrears. And some of May's customers will pay us 2 months in arrears. Now, August's we can ignore. That's just what we call a red herring. It's just there potentially to try and trip you up. So we're doing the cash budget for July. We don't really need to know what was invoiced in August, but we might need that for the written bit afterwards. All customers are given a credit of given credit of 30 days. Marwen offers a cash discount, though, of 4% if they pay immediately, and 1/3 of his customers take advantage of this offer. Okay, of the remaining customers, so of the remaining 2/3, 70% will pay within 1 month, and the remaining 30% are expected to pay within 2 months. However, 2% of the amounts outstanding for 2 months will not be paid and will be written off as bad debts. Now, we have to be a bit careful with this. We've got 4% cash discount being offered, but it's not 4% of the whole lot. It's just going to be 4% of the 1/3 of his customers who pay him in the month that they've been invoiced, so in this case, July. And with the irrecoverable debts, 2% of the amounts that are outstanding for 2 months. So if you remember, it was 30% of the remainder. So in this case, we're going to be dealing with customers that were invoiced in May are going to pay him 2 months later, so in July. But May's customers that are paying within 2 months is going to be that £6,000 minus the 1/3 that will have paid him in May, and then minus the 70% that will be paying him in June. Okay, so it's whatever we're left with after that, and then minus 2%. So it's effectively going to be 98% of those May fees that pay him in July. Okay, we'll come back to that in a minute. Marwen pays an assistant. That's fine. The payment's going to be 10% of the fee income. And this is paid in the month after the fees have been charged. So this is in arrears. So if we're doing July's, this is going to be 10% of June's fees, which is £7,500. Okay, so 10% of £7,500 June's fees. Marwen rents his office. The annual rental is £12,000. Okay, so £12,000 divided by 12 is £1,000 a month. He pays it monthly in advance, and he's been informed that the annual rental will increase by 5% from the 1st of July. So that £1,000 is going to go up by 5%, which is going to be £1,050. Okay, overheads of £3,500 are paid in the month that they're incurred, so that's just a straightforward £3,500. Marwen intends to pay for a new computer on the 1st of July. The cost is going to be £1,800. It actually doesn't matter that it's got an estimated useful life of 3 years, because remember that no depreciation should ever be included in a cash budget. It's just money in and money out. Marwen takes cash drawings, 25% of the fees invoiced in that month. So for July, his cash drawings, £9,000 times 25%. I really should be able to do that in my head, shouldn't I? £2,250. Okay, one last note here. On the 1st of July, Marwen intends to increase the capital invested in the business by transferring ownership of his car to the business. The car will be valued at £18,000 and will have a useful life of 5 years. Well, we can ignore that. The double entry to sort that one out is going to be to debit non-current assets and credit his capital account. He's not putting cash of 18,000 in, he's putting a car into the business. So that's going to have no place in a cash budget, although it will increase his capital account and the value of the business. It won't increase the cash, but he's going to transfer money from his personal savings to pay off the overdrawn balance. And it tells us here that he's got an overdraft facility. Now, the facility is the maximum amount that he can go overdrawn. So that's £5,000. That's great, but it's not going to concern us. He's actually going to be £3,800 overdrawn. So that's going to be the opening balance. Because it's overdrawn, we're going to need to put it in brackets. And we're going to have to treat the £3,800 as capital introduced as well. So that's going to be a receipt of money coming into the business. Okay, so let's just have a reminder about the layout then. If we do a cash budget, we want a pound sign at the top. We're only doing it for 1 month. So we're going to start with the receipts. So remember, we need to organise this nice and clearly. So receipts, first of all, he's going to have fees received. First of all, in the month invoiced. So that's going to be a third of his income for July. People that pay him in 1 month. So this is going to be from June. And people that pay him in 2 months, which is going to be from May. We've also got the capital introduced to include in there. And that's going to give us our total receipts. We can then do the same with payments. Let's just list them out here in the order that we've given them to. We've got the assistant's wages. We have got the office rent. We've got the overheads. Also, we've got the computer. And we've got the drawings. So remember, although drawings aren't an expense, they won't be on the income statement. They are most definitely going to be part of the cash flow. So we need to include those. So 1, 2, 3, 4, 5. I think that's probably all of the payments that we're making. So we're going to total those up. When we found these totals, we're going to find the net cash flow. I always think the best thing to do is work out the net cash flow. So that's going to be receipts minus payments. Okay, and if it's negative, if our payments are higher than our receipts, don't forget to put it in brackets. We're then going to stick the opening bank balance in, which in this case we know is an overdraft of 3,800. We've given that the last line of the question, and then we're going to come up with the closing bank balance. Okay, so whatever we get here for the net cash flow minus the opening bank balance will give us our closing bank balance. Excuse me. Right, so let's go back to these fees then. So fees in the month invoice, if we look at July's, we've got £9,000, but only 1/3 of his customers pay him in the month. So that's £3,000. And then of that, we've got to take 4% off for a cash discount. So £3,000 times 4%, take that off, means that he's going to receive 2,880 in July. Okay, so we don't need to worry about showing the cash discount separately. We just need to take the discount off because all we're interested in is the actual money received. We're not doing an income statement or anything here, so we don't need to worry about that. Right, in 1 month then. So in June, he's invoiced £7,500 worth of sales. So 7,500 is the starting point. We want to take off 1/3 of that because £2,500 worth of those are going to pay him in June. So that leaves him with £5,000. 70% are going to pay within 1 month. Okay, so £5,000 times 70% is 3,500. I don't know what I pressed on my calculator there. Received in July from June sales. Now in May, he's going to receive the remainder of May's sales. So May's was £6,000. Let's start with that. So £6,000 minus 1/3 of those who are going to pay at the time, actually in May, and get the 4% cash discount. So that's £2,000. So let's take that off. £2,000. So minus 2,000 is £4,000. And of those, 30% are going to pay him within 2 months. So that's £1,200. But then we've got to take off the 2% irrecoverable debt. 2%. So that's actually going to leave him with 1176. Okay, so 1176. And then the last thing we've got is the capital introduced. Remember that £3,800 he's paying in from his own savings to pay off the overdraft. So if we just add up the income then, 2,880, 3,500, 1176, 3800. So we've got total receipts there of £11,356. Okay. Assistance wages, remember that was in arrears. So in July, he's going to be paying 10% of June's. So £750 there, 10% of 7,500. Then he's got the rent, which we worked out is 1,050. So that's £1,000, which is 1 month's rent. And then increased by 5%, which is an extra £50. The overheads, nothing's changed there. £3,500 there for overheads. We've got the computer, 1,800. We have got the cash drawings. So remember that it's 25% of the amount that's been invoiced, not 25% of the money that he's received. So never pick up a figure for drawings using the receipts on your cash flow. It's not going to be appropriate. It actually tells you here, just follow the instruction, drawings in cash of 25% of the fees invoiced in that month. So 25% of 9,000 is 2,250. And we can add those up, 750 plus 1050 plus 3500 plus 1,800 plus 2,250 is 9,350. So then if we do the 11,356, which is your total receipts minus your total payments, the net cash flow in the month is a positive of 2,006. And then we've got to take off the overdraft that we had at the start of the month, what he thought he would have at the start of the month. So we're forecasting the closing bank balance at the end of July to be £1,794. So I hope that's explained it all. I hope you can make some sense of my scribblings there. But just remember, if you're given these percentages, it's never going to be 4% of the whole month's sales. It's just going to be 4% of the bit that it relates to. So in the case of the cash discount, 4% of 1/3 of the current month's customers, so 1/3 of July's, minus 4%. And then with the irrecoverable debts, it's going to be 2% of not the whole £6,000, but 2% of that remaining 30%. Okay, so I hope you've enjoyed watching. Don't forget to like and subscribe. Thank you.